Hello everyone and welcome to today's webinar. My name is Peter Ward. I'm Chief Executive of the UK Warehousing Association, and it's my pleasure to welcome you today to this webinar that we're bringing to you in partnership with the team at Forest Brown. Forest Brown are our chosen partner in the area of R&D tax relief. And I think this is a really timely moment to be holding this webinar. We've now got a sense of what things are going to look like coming out of lockdown, the tremendous growth that is happening within our sector, and of course with the call for more and more logistics and warehousing space in a fairly constrained market, we're expecting many members actually to be seizing the opportunity for some investment over the coming months and through 2021 and beyond. I'm not sure how many members have explored R&D tax credits, but looking forward to Forest Brown today sharing with us 3 practical steps that you can take to ensure you make full use of this valuable incentive. R&D tax credits can be a great way for members to receive cash and support their business to meet the challenges and opportunities of tomorrow. However, as this session will cover, R&D funding can be open to risk, and it's important that any risks are properly managed. So, with their team of tax professionals, sector specialists, and ex-Hmrc tax inspectors offering considerable technical expertise and the work with a number of our members to make sure of all of the available incentives available. I look forward to hearing today's session, and I'll hand you over now to Jack Wanstall. Over to you, Jack.
Thank you very much, Peter, and welcome everyone. We're delighted to have you join us. My name is Jack. I'm a partnerships manager at Forest Brown, and for those who don't know us, Forest Brown is the UK's largest R&D tax credit consultancy specialist. It's our mission to help innovative businesses grow, and as Peter mentioned there, we're fortunate to work with a number of UKWA members and indeed many businesses from across the logistics space. We are incredibly passionate about the positive impact that the incentive can have on our clients' businesses. And speaking with me today on some key steps that you can do to submit a secure claim are 2 of my colleagues, James and Dave. Welcome to you both, gents.
Hi.
Now I'm just going to read a quick bio here. James is a qualified solicitor. He has more than 10 years experience in tax law. And at Forest Brown, James heads up our advisory practice, and he provides technical and strategic advice to both SMEs and larger businesses. Dave is a software expert sitting within our sector specialist team. He has over 20 years experience in digital, both in programming and in leading software teams. And Dave supports our clients who are wishing to submit claims around their advanced digital systems work and projects. Now, just as a bit of context, over the last 3 or 4 years, we've seen an increase in the number of businesses who are making use of the incentive, and I would expect many of you today have explored them. However, what we've seen is sort of many instances within the logistics space of companies who are claiming, but are not claiming correctly or securely. And this means that their businesses are missing out on funding, but also they're leaving themselves open to risk. And that is the risk of delay in those claims being processed and ultimately paid out, or even in a worst case scenario, the risk of an inquiry by Hmrc. So, James, before we look at sort of how businesses can check their claims and how they can mitigate those risks, can you tell us why this is such an important topic to be thinking about right now?
Of course, thanks, Jack. I think you've sort of alluded to it there, that there are 2 distinct areas here that we need to focus on. One is on companies making sure that they fully maximise the amount of R&D relief that they're getting the right amount of relief, and the other is that they're managing the risk in that process. On the first of those, even before the pandemic, I think businesses in this sector were increasingly investing in ways to streamline and automate themselves. And the pandemic itself has only really accelerated that process. You'll see from the slide that there are many different areas that a business can be investing in, and it will depend on their specific needs. But unsurprisingly, we see a lot of focus at the moment on software and technology solutions as companies become increasingly digital. The investment in those areas tends to be expensive, unsurprisingly again, and given the surge in demand for warehousing and logistics services created by COVID-19, the amount spent in those areas is only expected to rise in the near term. So it's really important that companies ensure they're achieving the full amount of value from incentives like the R&D tax credits. And as I'm sure many in the audience will already know, R&D tax credits are a really generous form of funding. They don't have to be paid back at any point in the future. You invest in innovation and you get a return on that investment. So they're as important to logistics businesses now as they've ever been. That's on the maximizing the value side. On the risk side, we're seeing a large number of advisors entering this space at the moment. And I think it's fair to say that some of them just simply aren't equipped to give clients the support they need. And we'll talk about that in a little bit more detail later. But Hmrc are aware of this. We understand that 100 new compliance officers are being added to Hmrc's R&D team this year. So greater scrutiny is definitely being given to the relief. And just to be clear on that, the government wants companies to be accessing relief, and extra compliance officers really shouldn't be any cause for concern. It just means that companies need to be confident in the work that their advisors are doing.
Yeah, thank you, James. And during today's webinar, we're going to be exploring 3 important sense checks that your business can make to ensure that those R&D tax claims are maximised in value, but just as importantly, protected from risk. First, though, let's just remind ourselves why the government invests in a research and development incentive. Dave, could you briefly touch on this for us?
Yeah, absolutely, Jack. So this is actually quite a lot of money. It's billions of pounds invested by the government every year, and it's part of their strategy to encourage and incentivise R&D activities and therefore investments in innovation. This incentive has been around for 20 years or so, but has become more and more generous over the course of time. The main reason that the government invests in this is it's good for the economy. It encourages companies to make efficiency improvements and become more competitive both nationally and internationally. It makes UK businesses more productive. But ultimately, the government's aim is to improve the knowledge and capability across all sectors of the economy, which in turn diffuses across the rest of the economy and leading back to further investment in the R&D in the future.
Thank you, Dave. I want to come on now to look at a couple of interesting stats relating to R&D funding within the logistics sector. And James, could you briefly talk us through these stats up on screen and what they mean?
Yeah, of course. Every year, Hmrc release statistics on the uptake of the R&D tax credit incentive. They're incredibly detailed, and because that's what we do, we get into a dark room and we dive into those statistics to uncover any interesting findings and patterns. From those most recent figures that we've seen, you'll see on the left-hand side of the slide that of all SME claims, less than 1% came from the transport and storage sector. That's surprising to us, given the size of the sector and the innovation that we've seen coming out of it. And it does suggest that there's an underutilization in the sector of the relief. On the right-hand side, of those that are claiming, the average value is 16% lower than the average SME claim. That suggests to us that SMEs in this area are underclaiming or they're missing the full value of those claims.
Yeah, so sort of taking both of those stats together then, what does this mean for UKWA members?
Well, firstly, it means that there's probably a great opportunity for many members to access what is currently an untapped source of funding, money that can help them future-proof their business. We often hear from our clients that the opportunity to recover a significant amount of money spent on R&D actually gives them the confidence to take risks in the first place, and is often the deciding factor in greenlighting investment into innovative work. And in fact, we work with a lot of our clients on a more sort of proactive basis to help them estimate the value of the likely R&D value of the work they're doing. And that then helps them to understand the true net cost of a specific investment. I think for those that are already claiming, the crucial point here is that it points to underutilization of the incentive. We'll talk more about why that may be the case later, but in our view, it's likely to come down to just not having access to the right guidance to uncover all of the relevant qualifying activities and costs.
Yeah, thank you, James. And when it comes to spotting R&D activity in your own projects and your own work, it's not always easy. And even businesses that have been claiming for a number of years can be prone to sort of overlook qualifying costs and therefore miss out on everything that they are entitled to. Dave, as somebody who has worked on hundreds of R&D claims, could you talk to us about sort of what companies and how can companies identify that R&D that they are doing in their work and what some of those often overlooked areas that they miss are?
Absolutely, Jack. So as you mentioned there, spotting R&D in your own work can be hard, and it's really where a good understanding of the R&D guidelines is needed. Often there are some aspects or even types of projects that are overlooked as part of an R&D claim, when in actual fact they're just as valid when you're trying to overcome a technical challenge. Many people think of R&D projects as needing to be cutting edge technology or creating entirely new products, but that's commonly not the case. If you are seeking to resolve technical challenges where there isn't a known solution you can make use of, you could be doing work that qualifies for R&D tax credits. It could be that you're working with legacy systems, which in itself mean that information to improve, extend, or integrate those are particularly lacking, or there might just be gaps in technology that you need to fill yourself. Another good example of this is from one of our clients, who's a fellow member of the UKWA. Number of areas that they could have overlooked during the claim. They undertook a major project to consolidate several independent software systems into a single ERP tool. Given the unique functionality required, the company ended up spending a fair amount of time doing R&D as they designed and built an entirely bespoke web-based system. It was a particularly challenging project, as all the different components needed to be coordinated to work together in a unified way. And that's something that always tends to throw up plenty of unexpected situations during the course of the project. Looking at the slide, there's a couple of areas here that can be overlooked commonly. So box 2 and 4 here, we've got a key indicator of R&D being that complex challenges might arise during the course of the project. They might be things that aren't foreseen at the beginning. They can also qualify. Sometimes problems aren't known at the outset, and it might be during the course of a wider project that there are multiple different aspects of R&D that need to be conducted to achieve the overarching project aims. It's also always worth thinking about what couldn't be expected. Were there any areas of development that you had to go down that you then had to abandon and move on to other approaches? Complexity and uncertainty don't always end as you want. Sometimes challenges cannot be overcome, and that could be for any number of different reasons. It doesn't make the work conducted any more or less applicable. Remember, the incentive is there to support work in areas that are more difficult or more risky than usual. Looking at boxes 5 and 6 here as well, we also find that the scope of the work considered when putting together a claim is sometimes limited. The boundaries of R&D can often go further to include indirect tasks or even a wider set of activities than the core of R&D. People tend to think that the clock starts when you start building, but there are many other areas that are needed for a successful R&D project. This could be covering technical feasibility studies, for instance, where you're trying to explore more of what the challenge is and therefore what might be needed to achieve it technically. Testing too is a vital part of being able to know if you've actually resolved technical challenges. In themselves, these tasks aren't likely to form the bulk of the claim, but it all adds up as you add them in. And then finally, if we look at box 1 here, something that quite regularly when I speak to developers comes up is that they're just doing their day job. It's what they do. And often you'll find that roles involved in R&D need to be natural problem solvers by nature. But that doesn't mean that what they're doing isn't part of the R&D claim. When we're trying to solve problems or learn something, and it might not even be a specific R&D project, you may be finding specific unexpected challenges as you go along. If you've had to overcome a technical challenge, and perhaps it wasn't intended to do, you weren't intended to do R&D at all, that could still qualify. To identify these aspects, it's worth looking back at the moments on the project where you've been trying to solve problems, and in particular, any really challenging, head-scratching moments.
Thank you, Dave. I think actually on this next slide, we have a quote from one of our clients that sort of neatly summarizes this. James, do you want to just talk through this particular example?
Yes, so this client was unaware that internal process improvements qualified under the guidelines, as companies often will be, unaware of where the full extent of the relief. We provided advice and some guidance. We analysed what parts should and should not be treated as qualifying, and we identified that actually those costs on the internal process improvements should be included in their claim. So we secured the business R&D funding that actually far exceeded their expectations. That money is now being reinvested back into the business, and that is going to be used to finance some further software development.
Thank you. And that actually leads very nicely into this next section, where we will be identifying 3 practical sense checks that you can do when making an R&D claim. Now, we often see businesses fall foul of 3 particular areas when making use of the incentive, and these center around value, risk, and time. And we will look now at the steps that your business can take to ensure you're claiming correctly across each of those areas. If you are already claiming, these steps can ensure that you make that full strategic use that we've been talking about. And if you haven't claimed before, we feel this could be a useful guide for how you can start claiming your R&D funding in the correct and secure way. So let's start with value, James. Put simply, how can businesses ensure that they receive everything they deserve via the incentive?
Yeah, so I think that goes back to the 2 initial areas that we talked about originally, that sort of the need to be accessing the full amount of the relief, and alongside that, the need to be managing risk. First and foremost, to achieve a fully maximised claim, to make sure that you're getting the full amount of relief that is due to you out of the claim, that discovery stage is crucial. So that the part where you're identifying what R&D qualifying activities you've undertaken is essential. And for that, you need to have sector expertise working alongside qualified tax advisors to scope the full potential of those projects. This helps to identify things like qualifying activity, but also things like timelines within that, understanding not just the starting point, the qualifying activities, but what else you need to get below that. So timelines, for example, are something that Hmrc are really focused on at the moment. And you could have a commercial project that starts in January and finishes in December, but Hmrc will want to know when the R&D project started and when it finished, because those won't be the same thing. In practice, for something like a software-based project, that means having people with software development expertise involved in the claim preparation alongside those tax advisors. So you've got somebody there who you can explain the intricacies of around the sort of the software work that you've done, which would be difficult with a non-software engineer, but you've got the tax advisor alongside that. We often come across businesses who fail to identify all of the qualifying activity. But if you are already claiming, there are some questions you can ask yourself to check that your claim is optimized. First one would be, do you have full visibility of the team who are advising you? So as I mentioned, it's important that you're working with industry experts and the tax advisors as part of that claim process in order to uncover all the value. So are they both there present and working on your claim? Second one is, are you seeing your claim increase year on year in line with your investment in innovation? So if your cost on innovation is going up, which it may well be at the present time for reasons we talked about previously, are you seeing your claim increase alongside that? And then third, and I really want to emphasize this one because it's really crucial, does your provider explain their findings and share their final reports with you for approval? It is your claim, and it is essential that you are confident and understand all of the nature of the assessments and judgments being made in that claim. So they really do need to show it to you, and you need to understand it. And if the answer to any of those questions is no, in my view, it's worth seeking a second opinion.
Thank you, James. Let's move on now to check 2, which is all about risk. and safeguarding your R&D claim, and how companies can protect themselves when making a claim. And just as a bit of context here, we have seen a shift in approach from Hmrc recently. They have moved away from simply sort of just raising awareness of the incentive to policing the quality of the claims that are submitted. And that is in response to a number of spurious advisors who have popped up, who are over-promising and under-delivering, and are frankly, offering bad advice to businesses around R&D tax claims. And the effect of this is that there has been an increase in poorly prepared claims, and even claims that shouldn't have been made at all. At Forest Brown, we're passionate about this incentive, and we consider it a privilege to work with so many exciting businesses involved in innovation. And as a regulated firm, we are focused on giving quality advice. So with all that in mind, James, what can businesses do to cut through the maze of firms that are out there and make sure that they are seeking and working with a reputable advisor?
Yeah, thanks, Jack. It's an important point, this one. I think there are various things that we can do, but I would preface this section by saying that we'd always recommend that you seek the help of a specialist to claim R&D tax credits. We've talked about above in terms of value and the need for sector and tax expertise. This can really be a nuanced, complex area of tax, and so having the support of a true specialist will ensure that you're accessing the right amount of relief and are protecting yourself from risk. Those are two areas again. There are a number of practical things that we're going to walk through that you can do to check that you're getting good sound advice from your advisors, and it really does pay to do some due diligence. There are, as you've alluded to, Jack, there are so many supposed R&D advisors out there. A lot of them will promise the world, and I can tell you that is part of the reason why Hmrc are adding so many compliance officers and are focusing on this area more. And it can be hard to separate the good from the bad. So here's a checklist to sort of help guide that process. The first one is regulated. We're regulated by the Chartered Institute of Taxation, the CIOT. Reputable advisors will have relevant professional memberships, and it's the same for tax lawyers and accountants. It should be no different for R&D tax credit advisors. If you don't know if your current advisor is regulated, you should be asking why not. I appreciate it might seem inconceivable that someone without the right tax expertise would set themselves up to deliver complex specialist tax advice to paying clients. Yet this is exactly what is happening, and we see that in the industry, and we see it from clients coming to us in inquiry later down the line. So the first is regulated. Second is sector-specific expertise. We've talked about that before. That combination of tax and sector knowledge is crucial to ensure that all of your R&D is uncovered and that you're protected from risk. So if you're claiming with your accountant, it's possible you won't have industry specialists working on your claim. That's the reason why we partner with lots of accountants, with hundreds of accountants, for that very reason, to make sure that they've got access to our sector-specific expertise. So get in touch if you think a chat to your accountant could help you. Third is inquiries. Hmrc are more actively policing claims. There are an increased number of compliance officers, and Hmrc can and do challenge R&D claims. And if necessary, they'll then go on to investigate previous claims. Now, the best protection against inquiry is to get the next claim right. That's the key. But if you do end up in inquiry, it's important that inquiry support is included as standard in your terms with your advisor. There are some advisors that do charge extra. And it could be a warning sign that your advisor isn't confident in the claims that they're preparing. Fixed term contracts. There's a danger that some people are signing up to advisors for 3, 4, 5 years worth of claims. I can't see any justification for this. It doesn't happen like this in any other professional services context. A trusted advisor should only want you to return because you want to. At Forest Brown, our engagement only rolls forward if you're happy for it to, and it should always be driven by the business, not by the advisor. The final point I make is advisors should be able to tailor support to your business needs. So just be a little bit cautious if an advisor is treating it as a one size fits all. They have one thing that they offer and they roll it out to you. You know, what is it actually that you need? How is your business structured, and where is the support that you specifically need? Are you looking in advance, you know, at projects that are going to take place in the next year? Do you want to understand the level of R&D that's likely to take place into that? Do they look at your commercial arrangements? Do you need to understand the nature of your commercial arrangements to make sure that you're not unnecessarily disqualifying certain costs? Do you need help with a specific part of your claim? It may be for whatever reason that you've got parts of it, but you want help with another part of it. Do you want to work with your accountants? Businesses are individuals, and they should be treated as such.
Just one final point on this as well. Any reputable advisor should send the final claim documents to you for review and approval before submission to Hmrc. And it's something that at Forest Brown, it's fundamental to our claim preparation process. We'll never submit a claim without having a client having full understanding of the claim and actually signed off all aspects of it.
Thank you, Dave. It's very clear there that, you know, due diligence is key when it comes to selecting an R&D advisor. So let's move on now to our final check, and this is all around ensuring that you don't spend too much of your own time preparing claims. And so, James, if I could bring you in again, how can companies know or sort of gauge if they're spending too much of their time preparing their claims?
I think that many advisors of all different kinds limit their time commitment often by taking more of yours. And that is true of big accountancy practices all the way down to specialist R&D advisors. I think one of the key areas is filling in templates. If you're being asked to identify your own R&D projects, fill in spreadsheets, write project narratives, and fill in template forms, are you best placed to do that rather than the specialists? And aren't you actually paying them to do that work anyway? So a specialist should identify the R&D with you. They should write up the R&D narratives. They should analyze all the numbers in the process, so that the business, and they should do all of that efficiently on their side, so that the business owners can focus on their business. I mean, ultimately, it should be treated as a partnership, but we would always try and take on as much of that work as possible.
Yeah, and Dave, could you talk us through how long would you expect a business to, a business investment in making a claim? What would their time investment be?
Sure. So I can only talk for Forest Brown's process. The way we look at it, as we've said many times, we're the specialists here. R&D tax credits is all we do. So we'll try and minimise your time commitment and get our team to do the legwork wherever we can. I'm not going to go and tell you this is the exact amount of time you need, because every client is unique. But if you're using an advisor this should give you an indication of where your time should be spent. If you're working with Forest Brown for a claim, you should be looking at around 8 to 10 hours for your input across the claim process. And that's across a number of people within the business, including involvement from the technical side as well as the financial side, with quite a lot of the time up front you can get in the process to get a clear understanding of the work you're doing. Again, I need to caveat this with the fact that every company is different. It really does depend on the structure of your business, what your claim looks like, and the complexity and scale of the work. But the value I think we bring is how we're able to translate your business information into a format that Hmrc recognise with all the information that they're expecting. And hopefully that means that the claim can be processed nice and smoothly.
Great, thank you, Dave. I'm conscious that we are sort of almost out of time for today, but gents, do you have any final comments for the audience?
Yes, well, only to say that if you haven't considered the funding for your business, then please do. R&D tax credits really should play a crucial role in investments in 2021 and the years ahead. If you'd like to find out any more about how it works, feel free to contact us, and my details are on the slide with the scarily large picture of me. For those who are making a claim already, if you're in doubt as to whether or not your R&D tax credit claim is protected from risk and fully maximised, please do get in touch. So as members of the UKWA, we are on hand to review your position. And please remember that R&D tax credit advice is tax advice. An R&D claim is a part of the company's tax filings with Hmrc, so it's subject to the same expectations for accuracy. Hmrc can, and they really do, check R&D tax credit claims, and they have wide-ranging powers to ensure compliance. That shouldn't be a cause for concern. It just reiterates and reinforces the importance of getting it right and having the right advice. There are also lots of different types of R&D tax services available, so choosing the right advisor and service that fits your business is important. So please do the sense checks we covered, and if your advisor isn't meeting the checklist that we showed, you should feel comfortable switching to an advisor that does.
Thank you, James. Well, that is everything from us. So I would just like to say a big thank you to everybody for taking the time to join us today. And for anyone who is in the audience that has a question that we've not covered in the content of today, please do get in touch with the details on screen. We would be happy to answer that for you. A final thank you as well to Peter and the UKWA for having us.
Yeah, thank you, gents. That was really helpful and very informative. And as I said in the introduction, I think very timely in the current circumstances and the environment that we're going forward into. I think many of our members will be looking to invest in their businesses to capture some of the opportunities that are out there. So really important to consider all forms of funding that are available and to ensure that they're maximised. And I think to the members out there, please explore these opportunities, explore the funding, the R&D funding opportunities that are available. And for the reasons that we've heard on the webinar today, please make sure you seek the support of a reputable specialist in this area. So with that, please contact Forest Bound directly. The contact details are on the screen there. Or for any further information around this or introductions, please contact us at UKWA, and you know where to find us. So thank you very much and goodbye.
Excellent. Thank you, Peter. Bye now.